Hello guys, good evening. This is FTS once again. I am not a financial advisor, neither do I give financial advice. This video is for educational purpose only. And as we know, past profit do not guarantee future results. The forex market is volatile. As you take your trades, apply risk management. All right, so this is the weekly market reviews or weekly market analysis. It covers the fundamental technical reasons why some currencies we go in a particular direction, why the dollar we gain strength in the short term, and why some major currencies will likely go down in the short term as well, right? Yeah, and so let's head straight to the chart, right? Yeah, so I will let you show us some charts. So that I'll do some analysis before I'll go to a live chart and tell us what we're expecting this week, right? So first of all, let me go to the week ahead. This week, what we're expecting, right? So it said this is gotten from tradeeconomics.com, right? So this is what we're expecting this week. It says trade development will take center stage as the US July 9th deadline for tariff pause approaches. Major US trading partner rushes to finalize deals in recent days or seek delay as President Trump prepares to announce new tariff to about a dozen countries on Monday. All right, so on Monday we're expecting that the deadline for the 3 months break he gave to these countries to try and negotiate for their tariff deal and all of that. Okay, if by Monday there is no concrete or solid arrangement, Trump might enforce the tariffs problem and all of that, right? Yeah. Also, FOMC minutes, China's CPI, PPI data, Germany's trade numbers, and monetary policy decision from Australia, South Korea, and New Zealand will also be in focus. Now, let's head straight to gold, right? Yeah, we all know gold is a hedge against inflation and a safe haven commodity, right? What do I mean by hedge against inflation? It means if inflation is going up, right? Gold is expected to buy, and if inflation is coming down, gold is expected to sell. And if by Monday the tariff talk, the tariff talk are settled, right, on time by Monday, or this week or next week, right? If they are settled on time, we expect a more sell-off from gold. That is what I'm trying to say. We're expecting a more sell-off from gold. We're expecting gold to go to the downside. And also, if the tariff talk are not going to be finalized, if they do not finalize these tariff talks by this week or next week, that means we should expect a more bullish move for gold, right? Now let's go to the next one, which is a volatility index. There's the reason I'm bringing out these charts, right? Volatility index, also known as fear index, right? So this is just to measure if there is a risk off or risk on sentiment in the market, right? And this is how you analyze it, right? If price trades above 20, right? 20 is the benchmark. If price trades above 20, that means there is risk of sentiment. That means there is a lot of panic and a lot of fear in the market. So investors will likely start buying safe haven currencies and safe haven currencies like the United States dollar, Japanese yen, Swiss franc. And if if price is below 20, that means investors will likely go on the normal, they'll likely invest in a risky asset like Aussie dollar and Kiwi dollar, right? And every other place they love to invest their monies, right? Yeah, so I'm going somewhere, follow me. Then the US bond yield, right? So they say the US bond yield reflects interest rate, inflation, GDP expectations, and investors' confidence, right? And investors' confidence in government debt. What does that mean? It means that if the US bond yield, 10 years bond yield is if the chart is going up, that means we are expecting a stronger, it shows that the GDP the GDP the GDP outlook of the economy is stronger, right? It also means that it means that inflation is expected to rise. And if inflation is expected to rise, that means the United States dollar should start gaining strength. That is what it means. And it shows that interest rate for interest rate, it shows that the Fed may likely hike interest rate. Now, for Fed to hike interest rates, it shows that Fed likely hike interest rate. Okay, so that is what it means, right? So that is the analysis, right? But right now we are focusing on the stronger economy right now. The United States economy would likely be on a short term strong because of it will be strong on the short term because of the United States data, job data that came out on Fridays, right? That's over 140,000 jobs we added uh for last month, okay? Yeah, so that's what it is, okay? Then if you look at it, so this is the dollar index, right? So this is dollar index, and dollar index is used to measure the strength of dollar against the G8 currencies, right? The basket of other currencies, right? And we saw that on Fridays we had a little bullish move because of the job data, right? So because of the job data, one, it shows that the United States dollar will likely gain strength a little bit. So there's no rush, or there won't be a need for them to cut rate in this in this next FOMC meeting that will take place on the 24th of this month, right? Sorry. And it also means that the rate the Malawi cut rates this year, but it's going to be either September or November or December. So the Malawi cut rate this year, but just once. But in the next rate meeting, they are not going to cut rate. Okay, that is what it is, right? So let's head back to the charts, and let's do our analysis, all right? Let's go back to the chart, do analysis. So before that, let's see the activities for the week. Though I've done that from the week ahead, right? As it was shown to us, okay? Just a minute. Okay, that's it. All right. So on Tuesday, as we have been briefed already, it's going to be on interest rate decision meeting for Reserve Bank of Australia. And then on Wednesday, um, okay, that's sorry. Okay, just a minute. Network is just slow. Okay, I think it is network issues. Beg your pardon. All right. So I'm back again. So on Tuesday, which is July 8th, right? So Monday is no key economic activities that will likely happen. So on Tuesday, we're expecting a Reserve Bank of Australia interest rates decision, right? And so that's around the 5 GMT plus 5:30 GMT plus one. Then on Wednesday, I don't know why we have two of them here, right? Then that's Wednesday, the FOMC minutes, right? So the FOMC minutes will likely hear from Powell, right? Yeah, more detailed explanation concerning the FOMC, right? Then on Thursday we have in charge of Lane, German CPI, right? Yeah. Then on Fridays we have GDP month of month for the UK, right? Okay, so let's head over to the currency, right? Now, so this is the US dollar. So for me, when I do analysis, I normally analyze US, I use the US dollar to analyze every other currency. So if I can get the bias of the market from the from the DSY or dollar index, I likely know where the market is going. So I use fundamental technical analysis in doing this analysis, right? So on Friday is the NFP data that was released. We had 147,000 jobs were added to the United States. So because of this, there's no so there will likely be no rush in the next rate meeting, which is going to be on the 24th of this month, right? So 24 days from now, right? Yeah, so 24 days from now, right? So I think the end of this month, right? So it means that if you look at this play, you see that the easy means for them to cut rates. So probability of the country rates this next rate meeting is 4%. Why no change at all is 95%. All right, so if you look at this soft watch, so this soft watch that they tell us when will FOMC when the FOMC will likely cut rate. So from here you can see that by I think by September, it's going to be the monthly cut rate by 25 basis point, and by October, the monthly cut rate by 25 basis point. So instead of three, previously it was three, but then they said that the monthly cut rate three times this year, but I think it has been narrowed to two or one time. So depending on how, so there's some school of thought are saying that they will likely cut rate once this year, while some are saying probably 25 basis point by September, then October another 25 basis point, making it 50 basis points. So for now, the dollar would likely go up a little bit because of the positive job data. So they are not in a hurry to cut trade. So if you look at H4, technically, we'll also look at technical analysis from here. So if you look at H4 from here, you likely see that where this is uh inverted this is a inverted head and shoulders pattern, right? Yeah. So inverted head and shoulders pattern will come from this. We're expecting a bullish move from to it. Nevertheless, the dollar is still bearish, right? Yeah, because we are still on the tariff period, right? Yeah, so we're expecting a move to this place, right? We're expecting a move to this place. So the dollar will still be bullish until price gets here. Then we can think of selling dollar. So this is a short term bullish move for dollar. When I said dollar would actually go up, and I gave fundamental reasons why the dollar should go up, right? So this is JPY index, right? So JPY index is used for me. I used to analyze all the yen pairs, right? So our Fridays after the NFP data, a strong US job data, we saw that there's a sharp drop in the JPY, right? And also we found out that the US and Japan, they have not settled their tariff agreement, right? So that is the reason why the yen will still go down a little. But for now, the yen and the dollar, they are positive and they are strong, right? So a break to the up like this will likely give a bullish move for the JPY, right? Yeah. So let's go to euro, right? Yeah. So this is euro index, right? So euro against every other major currency and every other pair, right? So you can see euro has been on a strong bullish move. Not that anything special, just that they're taking advantage of the weakness of the dollar, right? Yeah, and also if you look at this is euro was July. So they are currently their inflation is uh, let me check very well. I don't want to guess, right? Yeah, so yeah, inflation is currently 2%, right? And the interest rate is 2.5%, right? And based on the next rate meeting, right, which is going to be on next rate meeting is going to be I think on 24th of July, right? So investors they are in market of pricing for so there's 65% that they will likely cut rates to from 1.7 the they'll likely lower the interest rate so 1.75%, right? Yeah, so and because of this, so there'll likely be a little fall on the euro, right? So probability of interest rate cut decrease to like interest rate will likely be on 1.75. So there's 65% against 34% that they will likely hold rate. So they are cutting rates in the next rate meeting, which is going to be on the 24th of this month. And investors are already pricing for rate cut. So that means that we're expecting a fall in a retracement on the euro, right? Yeah, it's a retracement on the euro. So this place will likely where we'll likely look out for a retracement on the euro. All right, so I look for retracement on the euro. So in that case, what we're seeing is that for euro dollar, we're expecting a pullback for the euro dollar. So instead, I will look out for let me take out this image retracement, right? Because it's not useful right now. All right, so instead we're looking at for this flip zone, these levels, right? Yeah, this flip zone, right? Or we'll likely look out for price to hit this low, right? Yeah, we look out for price to hit this low before standing higher again, right? Yeah, but this is our target. So euro dollar this week will likely be bearish, right? Yeah. And for gold, right? Like I've said before, right? Two things will likely happen to gold, okay? Two things will likely happen to gold depending on how the tariff talks will likely be. Okay, so if the tariff talks are settled, right? So we expect gold to sell off, and if they're not settled, we expect gold to go up, right? Yeah. So fundamentally, technically, this is just a clear. It's clear that this internal liquidity being grabbed, and here change of character we're expecting gold to fall to come down as the dollar goes up, because right now, the dollar will likely be a bullish movement at the moment, right? Yeah, so we're expecting a bullish move for expecting a bullish move for the dollar at the moment, right? So let's go to NZD USD. NZD USD, for me, it's going to be a sell at the moment, right? So I'm not buying the Kiwi dollar against against United States dollar. So we'll likely look for a sell setup. So I'm expecting a move like this, okay, to the downside, right? Why for USD CHF? I'm expecting a bullish move for the dollar because the dollar is going to be a short-term buy. So I'm expecting a bullish move, right? I'm expecting a bullish move for the dollar. And as well, for USD CAD as well, I'm also expecting a bullish move for dollar against the Canadian dollar, expecting a bullish move. So price has hit here, so expecting a more bullish move to the upside. For GBP USD, man, well, I'm also expecting a bullish move. Though GBP is strong at the moment, right? But not against the dollar. Against the dollar, GBP is weak. GBP is weak against the dollar. But I'm expecting uh yeah, something like this. Okay, to the downside, right? Right. Why for Aussie dollar USD, it's gonna be a move to the downside because Australian dollar is a risk on market pair, and the dollar is strong in mid-term, right? So I'm expecting the Aussie Australian dollar to fall, right? So that's going to be my analysis for the week. For JPY against all these Euro JPY, GP JPY. All right, so for Euro JPY, I'm expecting price to come to the downside, right? I'm expecting price to come to the downside before scaling up, right? Yeah, likewise GBP JPY. So I'm expecting price to also come to the downside. Price might return before coming to the downside, right? While for CHF, I'm expecting price to fall, right? Yeah, I'm expecting price to fall from here, and yeah, that is what I'm expecting. Okay, expecting price to fall to the downside. That is what I'm expecting on that particular pair. Aussie dollar, ADJPY, same as that, right? So yen is stronger than them at the moment, right? So I'm expecting a fall for this particular pair, right? Expecting a fall for this particular pair, right? So that is it for me, right? So if you have not subscribed to my channel, right? Subscribe, like, and comment on this post. If you have any questions on this, you can likely ask me on the comment section, okay? So I'm open to question and answers on this, right? So that's going to be my analysis for the week. So for me, this week, I'm expecting a short-term bullish move for the dollar right here. So expecting a short-term bullish move for the dollar because of the strong job data that came out, and as a result, there's no rush in cutting rates this period, right? Yeah. So like I said, I showed us this chart because we are not expecting risk off sentiment. So market is still a risk on because the volatility index shows that price is still at 19, 18, 19, not above 20. So we're not talking about risk of market sentiment at the moment, right? Yeah, so that is it for me this week. I will only post that up in my private Telegram channel, private Telegram community for those in my community to benefit more. All right. Yeah, so this is my analysis for the week. All right. So thank you and have a lovely week ahead. Thank you.